Hey everybody, hope you're having a great weekend here at the end of May. I am doing a quick analysis on the state of Ethereum to give you guys an update on exactly how the bullish versus bearish divergences are looking, what kind of metrics we should be looking out for a turnaround, and figure out exactly where prices are going to go after prices have dipped to their lowest point since going back to March 2021. So we're sitting at around a 14-month low right now in terms of the price being at about 1767, 1770 or so. And we can kick things off kind of just as we do on a This Week in Crypto call, where we normally just go over Bitcoin metrics and then altcoins. But Ethereum has kind of been a little bit ignored and wanted to make sure to give it its due time and analysis. So we'll look at circulation first. And we like to look at this red line here to give us an idea of the 30-day moving average in terms of circulation, whether it's moving up or down. Right now, not really great news. However, it is moving up a little bit, just over the past couple of weeks. But on the 6-month, I'm sorry, this would be the 2-year cycle here, we do see that it is moving down more so. That said, the price has moved down more than circulation has proportionally. And the reason we know that is because we have an NVT model here, which measures the overall market cap of an asset, in this case Ethereum, versus its actual raw amount of unique tokens moving on the network on a day-to-day basis. We can see here, after a very long stretch going back to last June, where it was in semi-bearish and bearish territory, we're now looking to be closing out May with a semi-bullish divergence for the first time since last May, when we saw a big dip in the price. After, I should say, the all-time high hit in May, there was a big drop, and then circulation was just absolutely flowing in around mid-May of last year, when prices kind of all fell off a cliff, sort of like what's happening now, but it's kind of been all year long here in 2022 that prices have been falling crypto wide. So that said, it's a very good sign to see that even though circulation may not necessarily be, excuse me, wrong chart, I'll get to that later. Circulation may not necessarily be overwhelmingly good right now. It's at least holding up enough to justify that the prices are dropping a bit more than this chart dictates. So that's a quick snapshot on circulation. We can look at daily active addresses, which really isn't looking much better. After we saw an expected spike after the big drop on May 10th through 12th, daily active addresses have been pretty dormant, and this is obviously weakened bars, so take these with a grain of salt. But we're really looking at the lowest points we've been at for, give or take, I mean, September 2021, we're talking about around an 8-month low in daily active addresses. So also not great on that respect. We don't have the same kind of chart that we have for circulation, where we can see if it's a bearish to bullish divergence, but we do know that it isn't really rising at a significant degree, and it's mostly down since last year. I mean, this was when the fall happened in May of 2021 that I was mentioning. And the daily active addresses were averaging something like 670K per day, as opposed to 490K per day now. We'd like to see utility always stay high, because that is a good foreshadower of prices being able to recover. Moving on to MVRV, probably arguably our best alpha metric that Sentiment offers right now. Let me fix this one. I'm going to put this down at 15%, and this one should be at -15. So what we're looking at here is the 30-day average returns of Ethereum traders over time. When things get exorbitantly high, that tends to be when corrections happen. When things get low, that tends to be when bounces happen, and it's a good entry point opportunity. Right now, we actually are in an extreme negative territory. You notice these lines that I just moved? That's the +15 and -15% points. And when the 30-day MVRV gets below it, it generally leads to good results, certainly not always. There can be plenty of obstacles that can stand in the way of MVRV being a definitive metric that always shows where markets will go next. But it is a good sign to see that there is much less risk than average because there's already been so much trader pain and bleeding, indicating that on a metric that averages 0% over the history of Ethereum for any time frame, it's sitting at negative 17.3% now. So there is less risk than usual and some meat on the bone for prices to be able to rise at least until it gets back up to 0%. But sometimes that doesn't happen. So just 2 weeks ago, we went below that as well, and it hovered a bit before dropping even further. And that can happen due to simply 30-day trading having a bit of an expiration date and enough time going by where it's flat, where the 30-day MVRV starts to move up a little bit without prices moving up, and then it can fall down. That said, it's still a better time than average based on this metric. So that is some good news along with the circulation that we looked at. Weighted sentiment is always very important to look at. So the social volume of Ethereum multiplied by the ratio of positive versus negative commentary indicates that people are negative about Ethereum, not at an extreme rate by any means. The last time we really saw extreme negativity was back in February and March, and we saw what happened there. That was a local bottom. So we'd be looking for something like this again. And if this kind of negative thing starts to trend for 2-3 weeks straight, it would be a good sign that another bounce could occur, because we see really there were 3 main times that we had extended stretches since late 2020 of very negative sentiment here, here, and here. And all 3 times we eventually saw a major bounce after those negative sentiments were starting to stretch for over a month. So something to keep an eye on there on the weighted sentiment side. Better than average signal than usual going on right now. Supply and exchanges is interestingly, I mean, Ethereum has been absolutely moving off of exchanges at a torrid pace over the last year and a half, but it has started to move back up over the previous 30 days. We see here, if we go back to the 20, we'll do like the 27th right there when it was right at its bottom. So the supply and exchanges is up about 0.84%, overall about a 6.7% rise, just in terms of what it was versus what it is now. And price has moved down about 39% during that time, which is a massive, massive drop for Ethereum, which is pretty much the second least volatile coin outside of Bitcoin and, of course, stable coins, which are designed not to move. All right, whales, we can take a look at the 10,000 to 1 million Ethereum coin addresses to see exactly what the major key stakeholders are doing. I'll put a grain of salt on this and say Ethereum's tiers of whales have some gray area to them, and they're never quite as predictive as Bitcoin from what we found. But we do see that, there are obvious plays like major accumulation after drops occur, dumping as prices rise, as they're taking profit. And right now, we're kind of waiting to see some accumulation, but even though prices are dropping, there isn't really major accumulation happening like we'd expect, like we saw last May, about a year ago. And until that happens, we have to be weary that prices may go down a little further until whales decide it's low enough to really make their move and buy into Ethereum again from all the weak hands that are basically dropping out and giving their funds back to exchanges. Exchange flow balance, not too much to say. We had this big inflow spike here followed by an outflow spike. That's pretty normal. We'll see like kind of a zigzag on a big drop off when that happens. Nothing close to the extreme one we saw in mid-November where it was just a ton of outflow. But yeah, nothing too much exciting to report on the exchange flow front right now. Same with network realized profit loss. I'll kind of skip over that. If the development activity continues to look solid for Ethereum, so in case there are any whispers that Ethereum for some reason is not being worked on or innovated, their GitHub is showing otherwise, and we try to look at actual notable GitHub submissions rather than just like Slack messages that might look like a coin is being developed when in fact it isn't. This is not that case. It actually is seeing legitimate development every day. Social dominance and volume, we see a few spikes here and there, but really nothing special. Obviously, Terra Luna and some other occasional altcoins that are getting a lot of news, those are taking up the lion's share of stories right now, while both Bitcoin and Ethereum are looking a lot like this, where they're hovering around 10 to 15% of the discussions on a given day. We typically, on bull runs, like to see that Bitcoin and Ethereum are starting to rise in social dominance, like we saw here, just preceding the big rise here. Uh, but right now, nothing to really be too excited about. It's mostly pretty neutral. Age consumed, pretty neutral. Not a lot of dormant coins being moved at the moment. I'll get to this. I'll get to this in just a moment. That's worth looking at. Whale transaction count. We did see a big group of whales making moves around here, and it looked like an interesting accumulation spike. But the price after a very short bounce just continued to move back down. And that's kind of rare because in most cases, when we see clusters of whale transactions, this one was very similar, that's when prices tend to take off and at least show kind of a short to mid-term bottom. I wouldn't even qualify this as short term. It was like just 2-3 days. So this was a legitimate fake out, and I was watching this one being very interested to see what Ethereum would do and was disappointed to see that it just continued to drop. But watch for another cluster of spikes and see if that might be the real one that we're waiting for. All right, and as promised, I'm going to actually pull up a template that shows both Bitcoin's and Ethereum's ratio of profit to loss. And I'm going to switch that to Bitcoin so we can see them both at the same time. So check this out. Both Bitcoin here in blue and Ethereum here in red are currently in a very negative territory. Ethereum has only been this negative once before, and that was just 2 weeks ago, where the ratio of profits being taken at a loss was basically happening 2 times as much as transactions taken in profit. And we did have like I said, a very small 2 to 3 day bounce, but it didn't really lead to much. And then prices kind of flattened back out, got a little lower than where they were when that bottom occurred on May 10th. But considering it's happening again, this is one of the more optimistic signals, in my opinion, because historically, when you see these really negative ones for Bitcoin or Ethereum, like here when there was a bounce, or here when there was a massive bounce, this one arguably kind of just chopped after it happened. But the further down, the further toward the transactions in loss it goes versus profit, the more likely a bounce can occur. You do want to be hesitant to be in if you see the opposite and these huge spikes happening here or here, where we obviously saw local tops. So a few other metrics to look at. I have this custom template, which I'll leave in the description. This shows the average MVRV. We looked at the 30-day MVRV, but this actually is combining 1, 7, 30, 90, 180, and 365-day MVRVs all together to show just how high versus low we currently are. I'll touch on that red line in a second as well. Let me make this, we'll go last 3 years to really give a good zoomed out perspective of what it means right now. So the average MVRV right now has only been this low one other time. And guess what? That was Black Thursday when COVID impacted all sectors across the world and it caused drops that we really hadn't seen before. And that was the only time. And obviously, it was an incredible buy opportunity when that did happen. We did have a similarly low, but not quite as low, drop in late January, and that led to a big bounce. This one was a little bit smaller, but even that we saw a small bounce from it. But right now, this should be a pretty bullish signal, in my opinion. Obviously, not investment advice. We don't do that on these videos. But historically speaking, this is the kind of time in MVRV that would signal that capitulation is near and traders are very close to maximal pain. That doesn't mean that they can't have a little bit more, but it is rare for us to see, at least in the last 3 years, for the MVRV to get as low as it has been. Now, as promised, we also have this one, the 30-day divided by 90-day MVRV. This was brought to us by a community member who was experimenting with some good combination metrics and found this to be great alpha. And we agree, when the mid-short term and mid-long term MVRVs have a relationship where the short term is kind of exceeding in losses compared to the longer term, that tends to lead to bounces. And we had one here. We had one here too. And then we're on pace to really see close to this low of a ratio once again. And we'll see what happens. Generally speaking, it's at least a better time than average. The way MVRV works in general is the lower it goes, the higher the opportunity is, the higher it goes, the higher the probability of a correction there will be. So keep that in mind, and it's another good sign. Daily active addresses, you can really see just how much the relationship between daily active addresses versus price was exploding right around the beginning of the bull run in March 2020. And yes, we're nowhere near that now, but we kind of like to look at more recent times and see if it's at least rising, which it should be a little bit. Give it just a minute. Yeah, so it had its big rise, obviously, on the big drop, and there were tons of daily active addresses going on. And even though daily active addresses have dropped off, as we covered in the beginning of the call, we can see that prices are going lower, which is causing this divergence to be a little more bullish. It's not really extreme. Obviously, we saw 2019 was a completely different world in terms of this divergence, but it's at least good to see that it's on the rise right now. Also worth noting, positive versus negative sentiment. Look at how the ratio of positive versus negative comments got as low as 1.77 to 1 in terms of positive versus negative. That's very low for basically a sector where you overwhelmingly see a lot more positive comments than negative. Like we saw 21 times as many positive versus negative comments here in February. And it stayed that low. It's really been between 1.5 to 2 times as many positive versus negative comments, which is extremely low. So that's another good sign that sentiment is extremely negative and people don't believe in a big bounce occurring anytime soon, which, as we know, strengthens the possibility of a big bounce happening anytime soon. And average funding rate, just checking to see if there's anything here. I didn't look at this in advance, but right now it looks to be pretty neutral. We look for extremes like right here when it's a ton of longs going on. That will lead typically to corrections, and this will lead more to bounces. But right now, nothing too special going on here. So yeah, hopefully this is helpful to you guys. I will leave the links in the descriptions so you can check these out yourself as long as you have Sandbase Pro or you're on your free trial, which you can make by just signing up with a new account and a new email address. Go explore and let us know what you think about this analysis and give us your feedback on where you think Ethereum will go from here. I hope you all enjoy the rest of your weekend, and I will chat with you soon.